Okay, so this video may piss you off a little bit actually when you find out how much the government is taking from you in national insurance contributions, and you don't even get, in some cases, if you die before pension age, then there's no way of you getting it back, or your family inheriting all that money that you've put in to a pension. Just disappears. So I did this is a chat thread that I did with ChatGPT yesterday, discussing about the national insurance. So I'm just going to get it to summarise what we talked about yesterday. Let's just see if we can get it to do that. Hi chat. So we're in the thread which I started yesterday about the national insurance contributions. So if we can just do some summarising of what we talked about, and so if I can ask you, rather than doing all the calculations again, just go back through this thread and just tell me what we worked it out to be. So if someone started off, they was earning 35,000 a year, which is just slightly above average or about average, what did we calculate what they would contribute in national insurance contributions per year?
Sure. To recap, we estimated that someone earning around £35,000 per year would contribute roughly between £2,500 and £3,000 per year in national insurance contributions. This was based on the current contribution rates and thresholds.
Okay, so then we calculated sort of an average, and we said about 2,750, and then so how much contributions would someone have made if they worked from the age of 20 to retirement age? What figure did we get for that?
Right, so we took the annual contribution of about £2,750 and considered a working period from age 20 to the current retirement age of 66, which is 46 years. Multiplying 2,750 by 46 years gives us a total of about $126,500 in national insurance contributions over that working lifetime.
Okay, and we also discussed that is obviously there's no compound interest on that, because the government just says it just holds on to it for you to pay for your pension and your whatever it is that they pay for. Yeah.
Exactly. We noted that the national insurance contributions aren't invested in a way that accrues interest for individuals. Instead, they go into the National Insurance Fund, which helps pay for state benefits, including the state pension. How that total of around $126,500 is essentially a straightforward sum without any interest or growth over time.
Okay, so what did we then say if we took that payment out, and we, instead of giving it to the government, we put it in a bank account where it earned interest? And I think we based the calculations on 3% interest.
Yes, we considered what would happen if that total amount of $126,500 was placed in a savings account with a 3% annual interest rate. Over a typical working lifetime of about 46 years, that initial amount would grow significantly due to compound interest. We estimated that it would become roughly £728,000 by the time you reached retirement age, thanks to that steady 3% growth over the years.
And where did we, I seem to remember that we came up with a figure of 1.3 million. How did we get to that figure?
That's right. We arrived at the £1.3 million figure by considering what would happen if those national insurance contributions or a similar amount were instead saved and invested with an annual interest rate of 4% over a typical working lifetime. By factoring in compound interest over 46 years, those contributions could potentially grow to about £1.3 million, showing the power of compound interest over a long period.
Okay, and I think that was based a little bit on increase, obviously, in the wage over that period. Was that correct?
Yes, exactly. We factored in an average annual increase in wages of about 5% per year, which means that the contributions themselves would grow each year as wages increase. This growth in contributions combined with the 4% annual interest rate on the Caudal savings is what led us to that substantial final amount of 1.3 million pounds.
Okay, and what is the current annual full pension that is provided at pension age?
At the moment, the full new state pension is about £11,500 per year. This amount can vary slightly each year due to adjustments for inflation and the government's triple lock system, which ensures that the pension amount increases each year.
Okay, so if we had 1.3 million and we left that in the bank for a year, typically what was the interest that we said we would that would earn?
With an interest rate of about 3% per year, the 1.3 million pounds would earn roughly 39,000 pounds in interest over the course of a year.
So if when we retired we just left that money in the bank for a year before touching it, we could then withdraw almost 40,000 pounds per year and still have the 1.3 million in the bank. Was that correct?
Yes, that's correct. By leaving the 1.3 million in the bank for a year at a 3% interest rate, you would indeed earn about 39,000 pounds in interest. This means you could withdraw nearly 40,000 pounds annually without even touching the principal amount, allowing that 1.3 to remain intact.
And also, if we died, then our next of kin would have something to inherit, correct?
Absolutely, yes. So if you have that 1.3 million pounds still in the bank and you're just living off the interest, then the principal remains intact and it can be passed on to your next of kin. So it definitely provides a nice financial security for your loved ones.
So based on what we talked, if it were you, would you choose to give the government national insurance contributions, or would you suggest investing the same amount of money in a bank account which give you interest?
That's a thoughtful question. National insurance contributions do provide access to the state pension and other benefits like healthcare and Social Security, which can be quite valuable. On the other hand, investing the same amount independently could potentially yield a larger lump sum due to compound interest, as we discussed. It really depends on individual circumstances and preferences. Some might appreciate the security and guaranteed benefits of the state pension, while others might prefer the flexibility and potential growth of private investments.
Thank you, chap.
You're very welcome. If you have any more questions or if there's anything else I can help with, just let me know.
So there you have it. Your national insurance contributions, if you paid them into a bank and got interest on it, if you died before pension age, all the money that you'd put in would go to your next of kin, your family, your wife, your kids. Whereas I don't believe at the moment, if you pass away before pension age, you get diddly squat back. So just let that sink in before you pay any more national insurance contributions. 1.3 million, and then living off the interest of 40,000 a year. Sounds like a good move.